We've all heard the term smart money, right? Those big institutions that just always seem to have an edge. But what if you could actually code that edge? Well, today we're going to peek inside the modern quant's toolbox. We'll see how AI is taking raw institutional data and turning it into automated trading strategies that are constantly learning and improving. Let's get into it.
So here's our game plan for today. First up, we'll break down what that smart money advantage really is. Then we'll get into the AI engines that are building these trading bots. After that, we'll follow the breadcrumbs from a news article all the way to a working piece of code. We'll even put a failing bot under the microscope to see how it gets fixed. And finally, we'll wrap it all up with a new trading playbook this creates.
All right, let's kick things off with Section 1, the smart money advantage. Because before we can even talk about AI, you got to understand this huge fundamental divide that exists in the financial markets.
And this number, well, it pretty much says it all. It's a pretty harsh reality, but something like 90% of retail traders end up losing money. It's because they're essentially playing a completely different game than the big institutions, and it's in that gap where the whole smart money strategy finds its opening.
So what makes their game so different? This breaks it down perfectly. See, smart money is all about futures and options. They're digging into institutional reports, basically using forward-looking data to get a sense of what's about to happen. The typical retail approach, that usually means focusing on the spot market, reacting to whatever news is public, and using lagging indicators. Data about what's already happened. It's the difference between trying to anticipate where the ball is going versus just chasing it around the field.
So that brings us to Section 2. How do you actually bridge that gap between anticipating and reacting? Well, that's where the modern engine comes into play. AI-generated trading bots. This is where the tech really starts to shine. But here's a really critical point. Just like with any powerful tool, not all AI is created equal. This quote is so important because in trading, one tiny little bug, a small inefficiency in the code, can cost you a fortune. Trying to cut corners with a cheap, low-quality model doesn't just give you bad results. It can literally sink your entire strategy from the start.
And this chart just lays it out, plain and simple. When you compare a top-tier, US-based AI with some of the cheaper options, it's just night and day. Sure, the US model might run you about $100 a month, but look what you get. Clean, high-quality Python code that can spit out multiple legitimate trading ideas. The cheaper stuff, you get what you pay for. Sloppy code that usually leads to one bad idea that loses money.
So how does this whole thing work in practice? Let's get into Section 3, from news to code. We're going to lift the hood and look at the actual pipeline that turns a piece of information into a strategy that can execute trades.
Okay, think of this like a little automated assembly line. Step 1, you feed it the raw materials, the institutional news reports, the stuff with hard numbers and future-looking data. The AI then digests all of it and spits out a high-level trading report, kind of a strategic summary. And this is the wild part. From that one report, it then generates between 10 and 12 different trading bots, each with its own Python script. Finally, all those potential strategies pop up on a dashboard, ready for a human to come in, review them, test them, and pick the best one. It's basically an idea factory.
But building the bot is really just the beginning. The real magic, the actual power, is in the feedback loop that comes next. So for Section 4, we're going to put one of these AI-generated bots under the microscope and see what happens when things go wrong.
All right, check this out. This is a real-world example. An AI generated a bot to trade the Euro-USD pair, and its first run was just awful. I mean, to be blunt, it was a total failure. Out of 6 trades, it lost 4 of them. That's a 33% win ratio, which means it was just steadily losing money.
Now, this is where it gets really cool. Instead of just trashing the bot and starting over, the developer took its trading logs and fed them right back into the same AI that built it. And the AI analyzed its own work and basically said, I see the problems. It figured out there were some data connectivity issues, the entry timing was off, and the parameter for exiting trades was way too tight for the market's volatility.
And look at how they told the AI to fix it. It's not some complex string of code. It's just plain English, a simple natural language prompt saying, hey, based on the problems you just found, build me a new, better version of this bot. It's just a conversation, asking the machine to fix its own mistakes.
And what was the result of that simple conversation? Bam! Look at that jump. The bot's projected win ratio nearly doubled. It went from a failing 33% to a potentially profitable 65%. That's a huge turnaround. A single feedback loop turned a losing strategy into a winner. That right there is the whole game.
So all of this brings us to our final section, the part that ties it all together, the new trading playbook. This is really the big picture takeaway from this whole AI-driven process.
You know, the old way of thinking was all about finding that one holy grail strategy that would work forever. This new playbook, it's completely different. It's about building an AI-driven system, a machine that is constantly generating, testing, analyzing, and refining strategies. The competitive edge isn't a single idea anymore. It's the speed and quality of your iteration.
To put it another way, the goal is no longer to find one perfect bot. The goal is to build the factory that constantly improves them. You're building an adaptive system that can respond to changing market conditions because it's always working, always improving. That's the only way to have a sustainable edge.
So we'll just leave you with this final thought. In an era where a brand new trading strategy can be created and refined by AI in just a few hours, is the biggest risk you face not having the best strategy, or is it failing to adapt your strategy fast enough? Because it seems pretty clear the game has changed from finding a secret to simply building a better system.